What if I told you the next trillion-dollar defense boom could be built on particles smaller than a grain of sand? Imagine military-grade nanotechnology making fighter jets lighter, hypersonic weapons faster, and energy systems stronger, all while delivering a 137% upside for early investors. This isn't just science fiction, it's happening right now.
Let's be honest, war, defense, and security concerns are fueling a global spending surge, and countries are investing billions to stay ahead. But while most investors focus on big contractors like Lockheed Martin and Raytheon, the real opportunity is in nanotechnology companies, the ones providing the building blocks for defense systems of the future.
And that brings us to today's episode, how nanotechnology is transforming aerospace, defense, and even clean energy, and why California Nanotechnologies, CNO, Kenoff, could be a 10x winner for those who act early. By the end of this episode, you'll know exactly how to position yourself for profits in the defense boom.
But before we dive in, let's set the stage. Picture this. You're standing outside the Pentagon in Washington, D.C., the headquarters of the U.S. Department of Defense. It's a fortress of steel, glass, and concrete, surrounded by security checkpoints and surveillance drones. Inside, teams are reviewing classified projects involving hypersonic missiles, stealth technologies, and next-generation armor, and all of it depends on nanotech materials.
Now imagine walking into a DARPA lab, where engineers are using nanoparticles to build lighter armor and energy-dense batteries for the military. It's here that California Nanotechnologies makes its mark, supplying materials that push the limits of performance in defense systems and clean energy technologies. And that's what makes this story so exciting.
The global nanotechnology market is projected to grow from $92 billion today to over $150 billion by 2028. Driven by demand for lighter aircraft, stronger materials, and advanced energy systems. Defense spending alone has jumped by 7% year over year, topping $2 trillion globally, with aerospace and defense contracts fueling much of that growth.
But here's the real hook. Nanotechnology isn't just improving existing systems, it's enabling entirely new categories of weapons and materials. Think about hypersonic missiles, weapons that travel at Mach 5 or faster. They require materials that can withstand extreme heat and pressure without breaking. That's where nanotechnology steps in.
And this is where California Nanotechnology shines. The company has already secured defense contracts to supply nanocomposites, materials that are stronger, lighter, and heat-resistant, making them ideal for hypersonic defense systems and space exploration vehicles. Their technologies are also being used in renewable energy storage systems, positioning them for multi-industry growth.
Right now, CNO's stock trades at 49 cents, with analysts targeting 1 Canadian and 16 cents, a 137% upside. And with the company's focus on military applications and clean energy breakthroughs, it's not just a defense play. It's a growth story tied to global megatrends.
In today's episode, we'll explore how nanotechnology is driving innovation in defense and aerospace, break down CNO's growth drivers, and show you strategies to maximize profits, from long-term investing to options trading and ETF diversification.
Stick around, because by the time we're done, you'll know how to position yourself for life-changing returns as defense and nanotechnology markets continue to explode. Let's get started. Nanotechnology isn't just transforming defense systems. It's redefining what's possible in material science, energy storage, and aerospace engineering. And as nations race to secure technological dominance, nanotech has become the secret weapon driving the next wave of military and industrial breakthroughs.
Let's start with the big picture. The global nanotechnology market is valued at $92 billion today and is projected to hit $150 billion by 2028. That's nearly 60% growth in just a few years, fueled by military budgets, space exploration, and clean energy systems. Countries aren't just investing in defense equipment, they're re engineering the materials that make those systems work.
Look at hypersonic missiles. These weapons travel at Mach 5 or faster, generating temperatures over 3,000 degrees Fahrenheit as they slice through the atmosphere. Traditional materials can't handle that kind of heat and pressure. But nanocomposites, with their lightweight strength and thermal resistance, are solving those challenges, allowing hypersonics to hit targets in minutes instead of hours.
And it's not just about missiles. Nanotechnology is reshaping armor and protection systems, too. Materials like nanoceramics and graphene reinforced composites are being used to build lightweight body armor, blast-proof shields, and even self-healing materials that repair damage in real time. Imagine soldiers wearing armor that can seal cracks instantly during combat.
The aerospace industry is just as dependent on nanotechnology. Planes and spacecraft need to be lighter, stronger, and more fuel efficient. And nanotech materials make that possible. Take carbon nanotubes. They're 100 times stronger than steel, but weigh only 1/6 as much, making them ideal for satellites, rockets, and hypersonic planes.
And let's not forget energy storage, the backbone of clean tech and renewable systems. Nanotechnology is being used to create supercapacitors and solid state batteries that charge faster, last longer, and deliver more power. These breakthroughs are pushing the boundaries of electric vehicles, solar grids, and portable power systems, making clean energy more scalable than ever.
So where does California Nanotechnologies, CNO Connect, fit into this picture? It's already supplying nanocomposite materials to clients in defense, aerospace, and renewable energy sectors. Markets projected to see double-digit growth over the next decade, with contracts tied to hypersonics, military armor, and advanced batteries. CNO is tapping into three megatrends at once.
What gives CNO an edge? Its patented production processes that make it easier to scale nanocomposites while keeping costs low. That's a key selling point for defense contractors who need precision materials without breaking their budgets. And with the company's R&D partnerships, it's not just producing materials, it's engineering solutions that meet the military's future needs.
Another critical advantage: defense budgets are locked in. The U.S. has committed $886 billion to defense spending this year alone, and hypersonic weapons programs are receiving $4.7 billion in direct funding. Companies like California Nanotechnologies benefit from this protected funding stream, giving investors long-term revenue visibility even during market downturns.
And that's why this market isn't just high growth, it's defensive. Whether global tensions rise or stabilize, countries will keep spending on national security, and nanotechnology will be at the center of that spending.
Think about the Russia-Ukraine conflict. It's accelerated investments in missile defense systems, drones, and advanced body armor. At the same time, China is racing to develop its own hypersonic weapons, pushing the U.S. and NATO to ramp up production. In this environment, nanotechnology isn't just important, it's indispensable.
And here's the takeaway. While defense budgets fuel growth, CNO's focus on clean energy systems offers diversification. That means investors benefit not only from military expansion, but also from the renewable energy boom, creating a double growth engine for profits.
In the next segment, we'll analyze California Nanotechnologies' financials, contracts, and growth drivers, and show you exactly why this stock offers a 137% upside with limited risk. Stick around. You won't want to miss it. Let's dive into the stock at the center of this nanotechnology boom, California Nanotechnologies, CNO Connect. This isn't just another materials company. It's a high-growth player positioned at the intersection of defense, aerospace, and clean tech industries. With a 137% upside and a debt-free balance sheet, it's primed for explosive returns.
California Nanotechnologies, or Cal Nano, isn't just building materials, it's engineering the future. The company uses spark plasma sintering, SPS technology, a method that produces stronger, lighter, and heat-resistant materials, perfect for hypersonic missiles, aerospace components, and clean energy storage systems.
What makes Cal Nano unique? It owns North America's largest SPS machine, giving it the ability to produce larger parts and scale manufacturing capacity as orders grow. And with its new Santa Ana facility, Cal Nano is doubling down on production scalability to support larger defense contracts and renewable energy projects.
Now let's talk financials. This company is growing fast. In Q2 2025, Cal Nano posted $1.74 million in revenue, up 243% year over year. Profits, $696,000, representing a 1,863% jump compared to last year. And it's not just top-line growth. The company's gross margin hit 66%, proving it can scale profitably.
And the best part? It's debt-free. After clearing $1.5 million in debt as of November 2024, Cal Nano now has the flexibility to reinvest in growth without relying on high-interest loans or share dilution. That gives it a competitive edge over startups that are still burning cash.
So where's the growth coming from? First, defense spending is surging globally. The U.S. alone allocated $886 billion for defense this year, and hypersonic missile programs received $4.7 billion in funding. Cal Nano's materials are already being used in military-grade components, giving it direct exposure to defense budgets that aren't going anywhere.
Second, the renewable energy sector is booming. Cal Nano's nanocomposites are being used in solid-state batteries and energy storage systems, key components in the shift to clean technology. With governments pushing for net zero emissions, demand for high-performance materials is set to skyrocket.
Now let's talk about valuation. Cal Nano stock is trading at 84 cents, with a target price of $1.99, a 137% upside. Even if it falls to 60 cents, the downside risk is only 29%. That gives it a risk-to-reward ratio of 1 minute and 4.7 seconds, meaning every $1 risk could deliver $4.70 in returns.
And the numbers back it up. Cal Nano's PE ratio of 42 is high, but it reflects triple-digit growth expectations. Its PS ratio of 11.5 aligns with the aerospace and defense sector, where high growth potential often commands premium valuations. With its patented technology and a locked-in contract pipeline, the upside is real.
What about risks? First, scaling production at the new Santa Ana facility will be key. Execution delays could impact revenues. Second, Cal Nano depends heavily on defense and aerospace markets, industries that are tied to government budgets. While these markets are stable, any cuts could slow growth.
But here's the big picture. Cal Nano isn't just riding trends. It's building the materials of the future. Materials that are critical to both military dominance and the renewable energy transition. It's a dual market opportunity, offering both stability and explosive upside.
For investors, the timing is perfect. The company is debt-free, scaling up production, and benefiting from two unstoppable megatrends: defense innovation and clean energy growth. And with analysts projecting a 137% upside, the risk-reward profile makes it a top pick for growth-focused portfolios.
In the next segment, we'll explore strategies to maximize profits, whether through buy and hold investing, options trading, or ETF pairings that capture nanotech growth. Don't go anywhere. This is where we turn insights into actionable strategies. We've covered the nanotech boom, explored California Nanotechnologies' 137% upside, and highlighted its role in defense and clean tech markets. Now let's focus on the strategies to profit. Whether you're investing for long-term growth, trading for short-term gains, or hedging with ETFs and options.
Let's start with the simplest strategy: buy and hold investing. For investors looking to ride the growth wave, buying CNO shares now at 84 cents and holding through its production scaling and contract growth could lead to multi-bagger returns. Its debt-free status and growing pipeline make it an attractive core holding for portfolios focused on defense and renewables.
If you're looking for higher returns with less capital, consider call options. For example, if you expect CNO to hit $1.99 a thing within 6 to 12 months, buying call options at a strike price of $1 lets you control more shares while limiting your initial investment. Pair this with protective puts to hedge against downside risk, keeping profits intact even if the market dips.
Prefer diversification? ETFs focused on defense and aerospace can reduce risk while providing AI-driven growth exposure. Consider ETFs like iShares US Aerospace and Defense ETF, ITA, or the ARC Space Exploration ETF, ARKX, both of which include companies driving nanotech innovation and military advancements.
Another option is pairing CNO with clean tech ETFs like the Invesco Solar ETF, DAN, or iShares Global Clean Energy ETF, ICLN. These funds benefit from the renewable energy megatrend, complementing CNO's role in battery storage solutions and energy systems. It's a balanced approach that taps into both defense stability and clean energy growth.
AI tools are also changing how investors trade. Platforms like Trade Ideas and TrendSpider use pattern recognition and news tracking algorithms to predict stock moves before they happen. Imagine setting up alerts for volume spikes in CNO or using algorithmic strategies to automate trades, turning AI into your personal trading assistant.
And let's not forget momentum trading. Perfect for short-term plays. CNO stock tends to move on earnings reports and contract wins, which are common catalysts in the defense industry. Traders can watch for volume surges and RSI signals to enter and exit positions quickly, capitalizing on short-term volatility.
For investors focused on risk management, combining dividend-paying stocks with nanotech can balance your portfolio. Stocks like Lockheed Martin, LMT, or Raytheon RTX pay steady dividends while benefiting from defense spending, acting as a hedge against CNO's higher growth profile.
You can also scale your investment by dollar cost averaging into CNO shares over several months. This approach reduces the impact of short-term price fluctuations and keeps you invested as the company expands production at its Santa Ana facility and wins larger contracts.
If you're looking to profit faster, earnings trades are another strategy. CNO's 243% revenue growth and debt-free status make it a candidate for earnings beats, which often trigger short-term price spikes. Entering positions ahead of earnings announcements and selling into momentum rallies can deliver quick wins.
Another overlooked approach, pairing CNO with small-cap growth funds like iShares Russell 2000 Growth ETF, IWO. These funds are built for high-growth stocks, providing a cushion while exposing you to broader upside as small caps outperform in bull markets.
For those who prefer long-term security, consider combining CNO with defensive assets like gold ETFs or U.S. Treasuries. This helps smooth volatility while keeping exposure to high-growth nanotech plays, a strategy often used by institutional investors.
The bottom line, whether you're a long-term investor, short-term trader, or someone looking for low-risk diversification, nanotech stocks like CNO provide multiple entry points to profit. And with AI tools, ETFs, and option strategies available, you can scale gains while managing risk effectively.
In the next segment, we'll share case studies of successful nanotech companies and explore business ideas for those looking to build AI-powered platforms in this growing market. Don't miss it.
History proves that the biggest breakthroughs in technology and material science often create massive investment opportunities. From semiconductors to solar energy, early investors have seen 10x or even 100x returns. In this segment, we'll explore nanotech case studies and share business ideas tied to the industry's explosive growth.
Let's start with the success story, 3M. Known for everyday products, 3M invested early in nanomaterials to create industrial coatings, insulation films, and specialty adhesives. Its nanotech-driven innovations boosted margins and fueled a 2,000% stock price increase over 2 decades. The lesson? Companies that use nanotechnology to solve real problems tend to scale quickly and dominate their niches.
Another example, Tesla, TSLA. While it's famous for electric vehicles, Tesla's battery technology is what powered its 10,000% plus growth. Early investments in nanomaterials allowed Tesla to build lighter, longer-lasting batteries, giving it an edge over competitors. This is exactly the kind of growth potential we see with California Nanotechnologies, CNO, as it scales solid-state batteries in defense applications.
And look at Neo, an EV company that leverages nanotechnology for its battery packs and lightweight materials. It saw a 900% increase in less than a year during the EV boom, proving that companies applying emerging materials can deliver fast returns as trends accelerate.
The takeaway? Materials innovation drives growth, and nanotechnology is now the core driver in industries like defense, energy, and space exploration. Companies like CNO are positioned at the heart of this revolution, and investors who recognize this early could see outsized returns.
The first idea, AI powered material design platforms. Companies are racing to develop advanced materials for aerospace, defense, and energy. Starting a software as a service SaaS platform that uses AI simulations to test new materials could attract high paying corporate clients looking for faster product development.
Another opportunity, custom coatings and composites. Nanotech materials are in high demand for military gear, medical devices, and consumer electronics. A startup focused on coating solutions for high-performance applications like heat shielding for hypersonic missiles could quickly gain traction in niche markets.
For investors with a manufacturing focus, building a nanoscale production facility that specializes in advanced composites and ceramics could serve clients in defense and clean tech sectors. With the growth of electric vehicles and solar grids, demand for heat-resistant and lightweight materials is expected to skyrocket.
Don't overlook AI-driven defense analytics platforms. Imagine software that uses real-time nanotech data to predict equipment failures, optimize supply chains, and monitor battlefield conditions. With defense budgets surging, governments and contractors are looking for tools that offer predictive insights.
Education is another growth area. Nanotech training platforms. Universities and businesses need skilled engineers who understand advanced materials. Launching online courses or certification programs in nanotechnology applications could create recurring revenue streams as industries scale up production.
And let's not forget personalized investing tools for nanotech stocks. Building a stock screening platform focused on emerging materials companies, complete with AI forecasting tools, could attract both individual investors and hedge funds looking for insights into this explosive sector.
So, what can we learn from California Nanotechnologies, CNO? First, focus on solving high value problems, whether it's hypersonic materials or renewable energy storage. Second, build scalable production systems to handle large contracts. And finally, maintain a debt-free strategy to avoid over-leveraging during growth stages.
And the opportunities aren't just for investors, they're for builders too. The demand for nanotechnology startups is skyrocketing, and businesses offering material solutions, AI tools, and education platforms will be at the center of this transformation. The question is, will you act on this trend?
In the next segment, we'll close with key takeaways, risk management tips, and a final call to action for investors who want to position themselves for nanotech profits. Stay tuned.
We've covered how nanotechnology is transforming industries, from defense systems to clean energy solutions, and why California Nanotechnologies, CNO, offers a 137% upside with a 1 minute and 4.7 seconds risk to reward ratio. Whether you're looking for long-term growth or short-term profits, this is a market you can't ignore.
The big takeaway? Nanotechnology isn't just cutting edge, it's becoming the foundation of modern defense and energy systems. Companies like CNO are solving high-value problems with scalable solutions, positioning themselves as key players in a $150 billion market expected to grow 60% by 2028.
And remember, this growth isn't limited to stocks. The nanotech boom is also creating business opportunities, from AI-powered analytics platforms to custom composites manufacturing. Whether you're an investor, entrepreneur, or trader, now is the time to act.
But no matter your strategy, risk management is critical. Pairing nanotech stocks like CNO with ETFs, dividend pairs, or even gold hedges can protect your portfolio while keeping you exposed to high growth opportunities. Diversify, hedge, and stay informed.
Before we wrap up, don't forget to subscribe on Spotify, Apple Podcasts, or Twitter for updates, bonus episodes, and breaking news about the nanotech revolution. This is just the beginning, and will keep you ahead of the curve.
Now for the disclaimer. The information provided in this episode is for informational purposes only. Investing involves risk, including the potential loss of capital. Always conduct your own due diligence and consult with a licensed financial advisor before making decisions.
While we've highlighted opportunities like California Nanotechnologies, this episode does not provide personalized investment advice. Past performance is not indicative of future results, and markets can change quickly.
We may hold positions in some of the companies discussed. Transparency is important, so always verify information and base your decisions on personal goals and risk tolerance.
The music in this episode is licensed under standard agreements. Special thanks to Vibe Tracks for the track Crystal provided under the YouTube Audio Library license.
This episode is copyright 2024 by Finance Frontier AI, all rights reserved. Unauthorized reproduction or distribution is strictly prohibited.
Thanks for joining us today. Stay strategic, stay focused, and use nanotechnology to make money. We'll see you next time.